Hello, investing friends. Welcome into Investors Club. Big dividends. Tuesdays at 2. Stream just for subscribers. Great to see you. Thanks for being here. Got a great show for you. We'll take a look at the best asset class in the world. And you can get it in stock form. Is it not stocks? We'll take a look at it. It's not stocks, only you can't really get a stock. This is the only stock in the world, and we had to go around the world to get it. But it's got a great yield on the best asset class in the world, and we'll take a look at why now is the right time to get in. The tide has turned. The tide has turned for a couple of things. We'll take a look at that. We'll take a look at the portfolios and how they're yielding. It's a great time to get in dividends. Great time to get into dividends. We'll say everything twice today. Say everything twice today because it's Tuesdays at 2. So we'll say everything twice. And we'll chat about anything you want to talk about. Big dividend income related. Let's get into it. Not an investment advisor, not investment advice, #1 ranked stock analyst in the world. And we'll leave it at that because this is the Big Dividends. Oh, and this is the inaugural show on the new channel, the Big Dividends channel. We're going to separate out the dividends and the small cap / trading stuff for the sit back and buy and hold and collect these lusty dividends type of thing. So great to see you guys. Chat it up, ask me anything, chat up anything you want. Income, cash, dividend paying related. And let's get going. And we'll turn over all the cards here. Today's stock is Dividend. Very interesting stock. First, let's take a look at the portfolios though. Let's take a look at the portfolios. I've got the names of the stocks down here minimized so we can't see them. But just as a reminder, what do we got? We've got the master list, everything by sector. So I went through every cash-paying security in the world. Do you believe that? All of them, and came away with 142 best. I'm going to add a fifth portfolio here, by the way, and add one more stock, and a fifth portfolio. But anyway. We came with 142 best cash-paying securities in the world and got listed out here by sector, so pretty cool. Take a look at all the communication services ones, all the consumer cyclicals, consumer staples. Very cool, and that's all the stocks, preferred stocks, and bonds at the top. And then we have, and ooh, look at all those REITs. And then we have, we have REITs, utilities, technology, materials, industrials, all kinds of great stuff. And then we have the ETFs, including corporate bonds, covered calls, energies, government bonds, high yield bonds, inflation protected bonds, international bonds, commodities, mortgage-backed bonds, and preferreds. And then we have the master list by type. And so these are just alphabetical. So we have all the common stock listed alphabetically if you want to look for stuff that way. And then as you look through, we've got it's got the daily move, the change, it's got the forward yield, the trailing yield, the 5-year average yield, when the dividend is being paid, the payout ratio, the market cap, enterprise value. It's got all the metrics: enterprise value, price to book, enterprise value to revenue, quick ratio, current ratio, all the debt metrics, and everything's feeding in. How to get this fixed again? Everything's feeding in. And then over on the right side, we've got a blurb about why we like each of these securities. Great stuff. And then we've got 4 different portfolios. You got the high yield portfolio. This one's yielding 9.52%. Got 40 securities in there, each one 2.5% target allocation. The sleep well portfolio yielding 5.72%, not bad. We've got 50 securities in there, well diversified, and it's a third. Business stocks, real estate stocks, so REITs, so regular dividend stocks, REITs, and then bonds. So a third. That'll help you sleep well at night right there, right? Dividend stocks, REITs, and bonds split up a third, and there's 50 different securities diversified across the economy. And then there's the dividend growth, yielding 3.43%, not bad. It's a pretty good yield, and then these are made to grow. Like, what was the one we, Climb, they just changed their name. Climb Global. They just changed their name to Climb Global. It was Wayside. Changed their name to Climb Global. Remember, they do the picks and shovels for tech. They go to all the latest and greatest new emerging tech startups, and they say, let us provide you the sales force because you got a great technology here. You don't have our network of sales, our sales channels. Let us be your reseller. And they do a great job, and they pay a dividend, and they're growing. And then there's the global tax shelter portfolio. Anywhere you are in the world, if depending where you get dividends from, you get these high yield dividends, but then there's like 30% withholding. It's like, oh, that's no good. So what can you do? Well, there's Bermuda, Estonia, Hong Kong, Singapore, and the UK in alphabetical order. Thank you very much. They don't withhold no matter what country you're in, no matter what. So you get 100% of the yield no matter what. And if Bermuda, for example, has no corporate tax, so these are pass-throughs. These are pass-throughs. All right. So Bermuda is a pass-through anyway. All right. And so anyway, we got the global tax shelter portfolio yielding 4.68%. There, no matter where you are in the world, these dividends all pay 100% dividends, no withholding. All right. Very interesting stuff, if I do say so myself. And that brings us to today's stock, and that is Vivint. Vivint. This is a Japanese stock. It has a stock that an ADR. I think it's an ADR that trades an American Depository Receipt stock that trades in the U.S., but it doesn't actually trade at all. It has no volume. So if you really want this stock, you can get on Interactive Brokers and get access to it that way. It's Vivint, and let's take a look at what we got to say about Vivint. This is my write-up I did for this. I recommended this one is in the small caps portfolio and the big dividends portfolio, but it's a good time to get into this one perhaps because the Vivint has had a bit of a rough time. You can see the chart of the last year. Considering it's been a bear market, it's really not been bad, but it's not been all that good either. And the reason is not really because of this company's performance, it's because of the dollar. The profits have gotten less and less valuable as the yen has gotten weaker and weaker versus the dollar. But that has now perhaps swung the other way. So look at this is like 1990. This goes back a ways. This is 1995. Make this larger. This goes back a ways, so all the way to 1995. But look at where we are now. This is the weakest the yen has been. This is the yen versus the dollar. So the higher it is, the stronger the yen is. The weaker it is, the lower it is, the weaker the yen is. So this is the weakest the yen has been back to like around 2000 or late 90s. Okay, yeah, 1998, 98. So it's the weakest it's been in, 25 years or something. But if we zoom in at and you can just see it's just fallen off a cliff over the last year. And so that's really blunted every foreign stocks, or it's blunted every Japanese stocks profits from an American perspective. But now if you look at the last year, it has now perhaps turned. Finally, the dollar's been very, very strong. The dollar has been very, very strong. It may have finally turned. That may be why Vivint surged, although they have news reported on their site. I can't get it to load, and it's in Japanese. But then you can translate it once you do get it to load, but I can't get it to load for some reason. So they surged lately 6% today, but they still got a ways to go. And they yield, even after the 6% surge, they're yielding 5.2%. So a really good yield on this interesting company. Why is it interesting? Okay, let's talk about the company and the sector that it's in, what type of asset class, the type of business that it's in. Okay, so this is my write-up on that, on Vivint. Fundamental to investing is asset class allocation. First and foremost, we should be diversifying across the asset classes based on our risk profiles. That means some stocks, cash, fixed income, maybe some real estate. Crypto might be in our risk tolerance. Perhaps we are gold bugs or commodity types. But what about the most overlooked asset class? Art and collectibles. Art and collectibles is a very interesting asset class. Various collectible assets have done well as investments over a long period, and these likely were not bought as investments, but had a lot of utility along the way as well. So this is collectibles. This is not art per se. But the red line here is world equities. This is from 1990 till 2017. You can see world equities went from 1 units up to 387. Good job. But some of these collectibles did quite well. Cars did 1 to 242. Wine 1 to 65. The average was 1 to 30, so they did okay, but that's just collectibles. Most collectibles have decent returns, but do not look great compared to equities. One type of art and collectibles does, though. Contemporary art. Contemporary art. Contemporary art is usually defined as art produced since World War II, and now represents most art in the world by both quantity and value. Okay, so here's the value over here. Red is contemporary art. That's the value of art made since World War II. Makes up 55% of most art in the world, according to CAIA.org. Impressionist modern art is 36%, and the old masters 9%. And then the number of works, again, 55% for contemporary, 38% for impressionist, 7% for old masters. The returns of this specific subclass have been quite aesthetically pleasing and second to none. Contemporary art has crushed the S&P 500 in the heat of the bull market. So here is, this is during the bull market, remember, when all the tech stocks were going crazy. So from 1995 until 2020, contemporary art did 14% annualized returns. All art was 9%, and the S&P 500 was 9.5%. So contemporary art, by performance since 1995, has been the best asset class. Citi Research shows the returns being a little less lusty, with contemporary art prices compounding at 7.5% per year from 1985 to 2018. The total annualized return of the S&P 500 was 7.7% over that time, while the art market as a whole was 5.3%. So contemporary art has some of the very best returns of any asset class. On top of that, it comes with surprisingly few drawdowns. Drawdowns are periods when you lose money. The high return asset classes are supposed to come with high risk in the shorter term, but contemporary art has not been playing by the rules. During its blistering 2.5-decade run, it has recorded a loss over a 2-year period only twice. So loss frequency over 2-year investment horizons from 1995 to 2020, 8% of the time for contemporary art, 16% of the time for the S&P, 16% of the time for global equities, 20% of the time for US housing, and 36% of the time for gold. That's pretty unbelievable. This asset class could be better than stocks. And it gets better. Not only does contemporary art have terrific returns and few drawdowns, it is practically uncorrelated with the rest of the investment classes. So this is hard to see. But art is here at the bottom. A correlation of 1 means it correlates completely. A correlation of 0 means no correlation. Negative numbers means it goes the opposite way. So art compared to the S&P is 0.11, so that's like 11% of the move of art is explained by the move of the S&P, so that's like nothing. Domestic equities, DM equities, 0.16, emerging market equities, developed market equities, 0.16, emerging market equities, 0.16, 10-year U.S. Treasury note, 0.02, the developed market investment grade debt, negative 0.09, high yield debt, negative 0.28, emerging market debt, 0.09, hedge funds, 0.02, private equity, 0.01, real estate, 0.02, cash, 0.18, commodities, 0.3, and gold, 0.1. So the closest thing that it correlates with is commodities with 30% correlation. A broad index of commodities, and that's definitely got to include oil, of course. Over 40 years, art had almost no correlation with the S&P 500 and had negative correlations with 2 types of fixed income. Contemporary art in particular is no exception, showing negative correlations over long time periods. So this is contemporary art now. And then so with the S&P 500, 0.06, global equities, 0.01, U.S. corporate bonds, 0.29, those are all negatives. Negative 0.06 for S&P 500, negative 0.01 for global equities, negative 0.29 for corporate bonds, negative and positive 0.20 for gold. So negative correlations over long time periods. 25-year, that's the 25-year correlation factor. And then let's talk about, so we talked about art. We talked about contemporary art. Now let's talk about Japanese contemporary art. The one type of investment that has beaten contemporary art, at least by some measures, is Chinese art. As the Chinese economy has grown, the art market has taken off. You can see Chinese art over here on the right. Post-war contemporary is right here, right next to it. Only thing that's beating it is Chinese art. There's all fine art, bonds, mutuals, mutual funds, homes, money markets, blended mutual funds, bonds, stock mutual funds, index stock index, international stock index, US stock index. But Chinese art beats all. Chinese art represents about 20% of the world art market by value in 2017. Considering the People's Republic is the world's second largest economy, that looks about right. But Japan has the third largest economy in the world at about 35% of China's GDP. With just 3.1% of world share, Japan's art market looks quite undervalued. So Japan has about 35% of the GDP of China, but China represents 20% of world art market, and Japan represents 3.1. Japan should be just a third of 20%, so like 7% or so. You can see Japan here, China here, Britain, United States, France are the other big ones. As of 2019, Nikkei Asia values the Japanese art market at $64.1 billion, up to 3.2% of the global share, with 18% for China, 20% for UK, and 44% for the US. The Japanese art market is just too small. Auctioneer Macy & Sons compares five top Chinese contemporary artists to five top Japanese ones, with stark differences in valuations that may distort the difference in quality and aesthetics. Chinese contemporary art is going for 10 to 20 times Japanese work. In terms of the auction market with Japanese painting, it is a bit behind Chinese contemporary art, which has been growing exponentially for 10 to 15 years. Japanese art in comparison has been only growing for the last 5 years. In my experience, the top 5 Chinese artists are Zhang Daqian, Qi Bashi, Wu Guangzhong, Chu Taichun, and Zhao Waqi. The top 5 Japanese artists are Yoshitamo Nara, Shozo Shimamoto, Ime Tashimitsu, Kazui Shiraga, and Yaoi Kusama, all selling between 5 and 10 million Hong Kong, in comparison to Zhao Wuqi, for example, that is selling over 100 million Hong Kong. So that was a mouthful, but the Chinese artist is getting over 100 million. The Japanese artists are getting 5 to 10 million. And then here's some work from one of the artists. Here is some from another. Can you tell the difference? Here's some from one. Here's some from another. Do you know which one is the $5 to $10 million works and which one is the $100 million works? Which one is drastically better? Japan. So the this is Zhao Wuqi. Zhao Wuqi is the Chinese one. So this is the more expensive stuff right here. And this is the stuff that's worth only 5 to 10% of that other stuff, obviously. Japan has a reputation for artistry, and their contemporary artists may be just as good as their celebrated Chinese counterparts. The high quality and low valuations are not going unnoticed by everyone. The Antique Sage writes, "I'm constantly challenging myself to discover new types of investment-grade art and antiques. But this search isn't an easy one. What I have noticed time and time again in my endless search for unconventional investment-worthy art is the amazing artistic talents of the Japanese people. Historically eschewing personal adornment and conspicuous displays of wealth, The Japanese instead turned everyday functional objects into glorious works of art. I don't intentionally target Japanese art when looking for unrecognized investment-grade art. In fact, I go out of my way to try to find unknown art and antiques from a variety of regions and cultures. And yet I continually find myself drawn toward Japanese works again and again. The Japanese people's artistic skill, particularly with highly detailed miniature work, is the stuff of legends. Their aesthetic reputation for both graceful simplicity and delicate naturalism is unrivaled. When searching for aesthetically pleasing work that is universally desirable, I believe you must go where the fundamentals lead. All too often, the final destination is Japan, the land of the rising investment-grade art. And not only are collectors starting to take note of the too low valuations, so is the government. Nikkei Asia recently noted steps the government has taken to stimulate the art market and turn Tokyo into an international art hub, with Hong Kong now being so much less hospitable as an art center in the region. Steps are being taken to stimulate Japan's art market by encouraging collectors, particularly international ones, to look to Japan as a key art destination and build an industry that can generate new wealth to support an aging society. Regulations were relaxed last year to allow neighborhoods or even individual buildings to be designated bonded areas where art can be sold tax-free at galleries, auctions, or art fairs, as long as the art is not brought into Japan outside the bonded areas. We need to encourage the world's galleries, which were hesitant to come to Japan because of strict regulations, to come and do business here. Taro Kono, Minister for Administrative Affairs, who has been urging development of Japan's art market, told the media last year. Haneda Airport recently received government approval to become a bonded area, and on October 1st, one of its halls will become the site of a major auction of contemporary Japanese art, including works by Yayoi Kusama, Yoshitomi Nara, and Takashimi Murakami. The idea is that if international galleries and art fairs come to Tokyo, collectors and wealthy travelers will be enticed to visit Japan and shine a light on new young artists in Japan. In March, the Agency for Cultural Affairs launched Art Platform Japan, an online resource for information on contemporary Japanese art, much of which is being made available for the first time in English. A new citywide initiative, Art Week Tokyo, will be held in early November with 50 galleries and museums participating. Enough of this. So they're encouraging art in Japan. The art asset class is a good one. Contemporary art is best of all for its returns, defensiveness, and lack of correlations. And amongst contemporary art, Japan may be the best undiscovered market. But how do you play it? Art Vivint is the rare securitized play on art. It is. There's not really many ways to play art. There's an ETF where they buy masterworks, I think it's called. They buy works of art and you get a piece of them. I'm not sure what I think of that, but this is an actual equity where you get a piece of the business. There are very few art-linked securities. Oh, I talked about it, I forgot. Very few art-linked securities available to us. Sotheby's was taken private like the best businesses often are, like Twitter. Masterworks also offers securitized fractional shares of famous artwork for hedge fund type, 1.5% annual, 20% performance fees. So those are pretty steep fees. That is about it as far as securitized investments go. How else are you going to invest in art as far as securitized investments? Except for a stock we recently discovered, Art Vivint. Art Vivint. It's AVVFF is the ADR, but you got to go, it's 7523 on the Tokyo Exchange, 7523. Tokyo-based Art Vivint mainly operates art exhibition halls. It sells art and has a large prints business in which it works with artists to create limited edition prints for sale. Art Vivint produces Japanese contemporary art. Can you believe it? And there's a CEO. Chairman and President Katsumi Nozawa founded the company in 1984 with the vision, the philosophy of the entire group is light up the heart. It's not about material things, but about the atmosphere that can be felt every day. From living with pictures through yoga and the health of the body and mind, we want to give as many people as possible genuine richness. Our mission is to provide as many people with genuine enrichment. The art galleries and exhibitions business is an interesting one in general. In the stock market, it is illegal to trade on undisclosed material information, and price fixing is also a no-no. The art market, not so much. Putting works on exhibit can drastically influence their prices and change artists' careers. People in the know can disclose this valuable information ahead of time to whomever they want, rather than disclose it publicly to everyone at the same time. So perhaps a deep-pocketed and speculative collector gets a heads up that a new painter's work will be on display next year, and in exchange, the collector suddenly wants to buy some of your gallery's dearest paintings. There is a reason that picking the next great artist is famously hard to predict. The winners can be a bit fixed. It is good to be on the house's side. It is a bit of an unfair but legal, sustainable competitive advantage. And then, yes, you read that right. This company also does yoga studios, but many Japanese stocks come with a mostly unrelated business, very funny stocks in Japan. And this one does not disappoint, but its health segment is relatively small and was profitable in the last reporting period, although it did have a tough COVID-related write-down. Art Vivan also has a pretty sizable credit cards business, financing its own customers as well as those of other merchants. For the 6-month reporting period, sales for art, finance, and health were 3.7 billion yen for art, 721 million yen for finance, 785 million for health. Operating income was 720 million for art, 515 million for finance, 5 million for health. So health is just, yoga is breaking even, credit cards business is great, and art is the biggest business. The exchange rate is about 113 yen per dollar. It was when I wrote this. Now, what is it now? Now, gotta flip it. Now it's 141. So it got destroyed. The yen is way weaker. Even with a little turnaround, the yen is way weaker than it was. So this stock's had a tough time, as all international stocks have. But things are now, it's still done okay. But the performance has been better. The company's performance has been better than the stock performance for that reason. But now the tide may be turning on the dollar. So the 5 billion yen sales for the last 6 months comes about $46 million in dollars. Art Vivan is a small company, but even for a small Japanese company, it's completely overlooked. Art Vivan has more than 5 billion yen in finished works on its balance sheet. So that's contemporary art it has on its balance sheet, more than 5 billion yen worth. And it also has more than 5 billion yen worth of cash on its balance sheet. So it has a market cap of under 8 billion. So it's a net. It has more cash in art than its whole market cap is. But oh yeah, it's a profitable business. And oh yeah, it pays a dividend, a big one, more than 5%. What a stock, what a stock. We get more than our money back in cash and art right from the start. It's actually better than that, as the price to book is currently right at 0.5. So you're paying pennies on the dollar. It's buy one, get one. It's half price. And Art Vivan is profitable, even though it operates in the foot traffic business in these COVID times. This is all about COVID, So the company is profitable in a depressed art market during COVID, and things are looking up. Art Vivan pays a dividend of over 5%. What is its latest PE? Price to earnings ratio of 6.27. You got to buy this stock. Gotta buy this stock. Gotta buy this stock. We get all the Japanese contemporary art for free, and then instead of paying to store it, they pay us a high yield. It's crazy. Usually when you buy art, you have to pay to store it. Here we get all the art and they pay us because there's a profitable business that goes with it. Was Sotheby's so hated by the market? Not at all. It sported a premium PE and a price to book that was consistently 10 times Art Vivan's. So its price to book was around between 4 and 6 its whole time, and its price to earnings was between 20 and 40 the whole time. With a market cap of 65 million, Art Vivint's a small cap, comes with all the usual caveats. It's also extraordinarily illiquid in the US. You got to buy it in Japan. It's liquid enough in Japan. I own this one. There's also the risk of Japanese demographics. Japan's a very old country, and that is spelling trouble for its economy, even more so than in other advanced countries, as Japan has frowned upon immigration. This is roundly bad for economic prospects. One possible morbid buffer, though, is that art tends to appreciate when artists pass away, and Japanese art could be an asset class that benefits from the demographic headwinds. Art is an interesting asset class. Within art, contemporary art has been the best subclass for its returns, defensiveness, and lack of correlation with other assets. There are precious few plays in this space, but Art Vivint is the rare securitized play on the art asset class and the very best subclass too. Its valuation is remarkably low based on its assets, profits, and yield, and we think represents a terrific investment in a terrific asset class. Where else, I ask you, where else are you going to get a stock like Art Vivint, but on Investors Club? Thank you guys for being here. Thank you for the likes. Really appreciate it. This is the first time on this new channel, and even though we don't have many people yet, this is the most we've gotten. So I'm very happy about that. Now that we're on the new channel here, we'll get going with some new stuff. And Chuck, thank you so much, Chuck. Great to see you, my friend. Thank you for the Thanksgiving analysis that you put out there for the earlier show today. Really appreciate that, my friend. Nice work. I really appreciate it, my friend. Thank you. Yeah, it's a very interesting stock. It's in Japan, so you got to get Interactive Brokers is the way I got it. But yeah, really interesting play. So I dug deep for this. When I told you, I looked through all the stocks in the world, all the dividend-paying stocks in the world. I wasn't kidding. Went through everything. Came up with that one. All right, great to see you guys. Thanks so much for being here. We'll do this again next Tuesday at 2. And again, now that we started this new channel, we'll do some new stuff. I might start a Discord. I think I will. I think I'll start a Discord just for the dividends, and then we'll get a group of people, because the small caps and trading people don't seem to be interested in the dividend stuff very much. So maybe we'll get some people that are interested in talking dividends by just having it separated out, and that'll be good. So great to see you guys. If I won't see you with this group anyway. Have a great Thanksgiving. Happy Thanksgiving. Have a great weekend, and see you Tuesday. Have a great weekend. Happy Thanksgiving.